What is up, guys? Happy New Year. It is January the 1st. So in today's video, I want to cover the charts like I usually do on the 1st of the month. Obviously, we'll also look at some larger time frames since the yearly candle is closed, the 6-month candle is closed, the 3-month candle has closed. And obviously, for the year ahead, I would like to share some thoughts and some ideas that can benefit you, that you can use to help guide you more accurately throughout this market. So before we get started, make sure you are subscribed to the channel because there's going to be a lot of content coming this year. Before we dive into today's content, I also want to share that I do think there's going to be opportunity to make money in the crypto markets, whatever is going to happen this year. Whether the market goes up, whether it goes down, whether it goes sideways and trades in a range, either way, there is possibility to make money. But I think there's going to have to be a shift to be able to focus on trading, to be able to take shorter term positions or swing positions. Purely buying and holding, I think, is going to be more tricky. So there has to be a two-part strategy, something that I'm doing personally also, which is accumulating spot positions of coins I believe in during these bear market lows, but then also have a trading portfolio that allows me to move in and out of the markets, whether that's day trading or, like I said, swing trading. Because purely buying and holding, if we get a repeat of 2015, where we go sideways for the whole year, that's going to be a frustrating year if you're looking to get any sort of returns from the market. There's also the possibility we repeat 2019 and we get an initial rally and then another sell-off. That is also a possibility. But either way, in either of those scenarios, being able to be flexible enough to trade and to enter the market in good positions and get out when things start to look too overbought and too euphoric again, that might be the best way to be able to profit in 2023, because we do only have the next Bitcoin halving in 2024 around about March. So if we go back and look at what has happened in previous bull markets, that has always tended to start a couple of months before the halving. So that means we might see a boring 2023. I will share with you some thoughts and ideas in this video, but if we get that boring 2023, you have to be prepared to be able to make it through this market, even if it ends up being a complete sideways market for this whole year, and that is where trading comes in. I want to start out by looking at the monthly historic return. So December actually closed in the red, negative 3.59%. It was a very boring, flat, sideways market. So in the red, very much in line with, you can see what's happened here in the past. 2018, 2019 was both negative 5%, and now we're negative 3%. So very similar to what has happened in the past. You can see historically, January has been more red than green, and you can see 15%, minus 15, minus 33%, minus 25%. Even last year was minus 16%. So we could see more downside in January. But again, on a month-to-month basis, it doesn't really mean too much. It could be green, it could be red, either way. So let's go look at the charts and see if we can see anything there from that analysis. So since it is now 2023, let's start out by looking at the yearly candle, right? The yearly candle chart. So every candle represents 12 months. And the interesting thing to notice over here is that we've had this pattern. In 2011, we had a red year, then we had 2 green years. Okay, then we had 2014 was a red year, then we had 3 green years. We had another red year in 2018, followed by 3 green years. And now we have had another red year. So this is the pattern that has basically been created in Bitcoin, but it doesn't mean it's going to repeat again. And in fact, things look a little bit different this time, because if you look at these previous red candles, they were much smaller bodies following a large green candle the previous year. This time, we had a very small green candle the previous year and a much larger red candle. You could argue it's a bearish engulfing candle that we see more downside. Who knows? Okay, so it is not quite the same, and we might not repeat the same pattern another time. Also consider the fact that since 2008, since the bottom of that crash in 2009, we have pretty much been in an up-only market where there was excessive money printing, interest rates were incredibly low, and that fueled this ginormous bull market in all assets, in real estate and stock markets, and of course in cryptocurrencies. And now we've seen that change in the last year, where the Federal Reserve and central banks around the world have increased interest rates, and they're currently still increasing those rates and potentially continuing to increase them for this year. And we still don't know if they're going to end up cutting rates or pausing or not. Maybe they do, maybe they don't. We take that on a month-to-month basis, because If you look at history, I've shared this in previous videos, once they start cutting rates, we usually see a larger stock market crash. So that's something to be aware of this year. If we see the Federal Reserve start to cut interest rates, we should be prepared for more downside in the stock market. So maybe across all assets, where we see the real stock market crash only come after that point. So on the yearly chart, there's not much to see here. We had a red year. And, you know, this year, if you're looking at yearly candles, so much can happen. I mean, it could wick all the way down to here, which is 3,500. Is that impossible? Maybe not, right? If that would be a wick down and then it comes all the way back up and then next year for 2024 it goes back up, that's a possibility. But again, it could also just go straight up here. So the yearly candle, you can't really do much analysis on it. Just wanted to show that to you. Okay, so what we have here is the quarterly chart of Bitcoin. And as you can see, we have actually had 4 consecutive red quarters. And you can see here on the chart, that has not yet happened if you go all the way back to even before 2014. So we're in an interesting point in Bitcoin where this whole 4-year cycle, like I showed you on the yearly chart, that might not continue to repeat in the way that everyone is expecting it to repeat. And that is not a bad thing necessarily. So like I said, I think this year is really going to be more of a trader's market where we can't make these expectations that it's just going to continue to go up after it has a red year, or you know that this 4-year cycle is going to repeat. We just simply need to adjust to whatever market conditions are being given, and that means the ability to trade, the ability to be patient, wait for opportunities for entries, get out at positions where it's starting to look too overbought, and we just need to let the market guide us. But basically you can see here 4 red down quarters over here, and if you can see on this chart, I don't see much support between this level over here and currently where we're at, right? So I don't really see a reason for the Bitcoin bottom to be in at this point in time. And I would like to actually see it hit this level, which is somewhere between 10,000 and 13,000. I have been saying 12,000 for a large part of last year, where I said that was a possibility. I still think that is potentially in play, where we could be looking at more downside to be able to create that final bottom. And you can see over here, this horizontal level, it's basically the tops of these quarterly candles, which is around 11,000. So for me, it would make way more sense for the market to move down, for the price to move down into that level to find ultimate support before moving higher. You can see over here, there's not much to indicate that we could be at a support here. Even the quarterly, you can see the 2018 all-time high, 2017, 2018, that's about 14,000, and we haven't hit that yet. Now we're getting to a more interesting time frame, which is the monthly, because you can see much more on this, and even that is a very high time frame. So we'll look at the weekly and the 3-day in a second also. But here you can start to see at least the 50 moving average in blue, and we are currently below that. You can see since that started all the way back to before 2016, we have not spent any significant time below this average. Yes, there was a wick over here in 2020 on the monthly, it wicked below it, but all this time it's been above it. And now for the first time in many years, we have now spent many months under this 50 moving average. And technically that is just bearish. So if you want a very simple way of knowing when the trend is reversing, well, we need to get back above that 50-month moving average, which means we need a monthly close at this point in time above 23,300. As long as we don't get that, you know, this could just be an extended bearish trend. We could still go lower. We could go to 14 or 12 or 10, or maybe even wick below $10,000. That is technically still completely a possibility as long as we are below this 50 moving average. And you can see here, this trend is simply down. You can see it's mostly red. It's making lower highs. It's making lower lows. And that has not yet changed. So from a technical perspective, the trend is still down. And what I want to see is at least a reclaim of this 50-month moving average. Until then, look, you can see there's much more support around these levels, what I just showed you, between $10,000 and $12,000 over here. And I would like to see the price get down there actually, and then create some sort of bullish divergence to be able to create that longer term trend reversal. Now if we zoom into the weekly chart, and you can see what I'm doing, I'm starting on the very high time frames and just zoom in, because the more you zoom in, the shorter term of a signal you'll be able to get, and more accurate. The longer term time frames, the higher time frames, take way longer to give any sort of signal. So you want to look at everything. You want to look at the high time frames, but also the lower time frames. And you can see here, very similar, the 200-week moving average in red is similar to the 50-month moving average that I just showed you in blue on the monthly chart. And it's the same thing. you can see since this appeared, this 200-week moving average, going back to 2016 or before it, we have not spent any significant time under it. We had the March 2020 sell-off where it wicked below it, but again, all this time we have spent above it, and now we have spent many, many weeks below the 200-week moving average. And just looking at the chart, whatever the bias is, put that aside, right? Your personal bias towards Bitcoin, is it the future, is crypto the future, all that kind of stuff. Looking at this chart, spending this time below the 200-week moving average is technically just bearish. So we cannot turn longer term bullish or medium term bullish until we at least reclaim this 200-week moving average, which again, here is about the $24,000 level. And we don't get into a complete full-blown bull market until we reclaim the 50-week moving average, which you can see over here, the blue. That is when we see major rallies, right? Even in 2019, we went over here from 5,000 to 13,000. The entire bull markets in 2017 and 2020 were above the 50-week moving average. And you can see that is currently still trending down. It's at 27,000. So that means that we don't have a full-blown bull market until we get back to at least above 27,000. And you can see over here, when it tends to come down so sharp, it does tend to take multiple months at least to flatten out so that the price can get above it. So even if we rally up here, there's a huge amount of resistance right now between 24 and 27,000 with these averages. So even if we do get some sort of upside in the short term, I would start to be careful around those averages and keep an eye on it. Obviously, I will update every week like I've been doing on the channel. But for now, just make a mental note of that. There's no medium term or long term bullish trend until we reclaim the 50 and the 200. And currently that means we need to get above 27,000. Now obviously every week below this, the averages do come down. You can see it's very clear, the 2017 all-time high. We have broken down below that after sitting on that for months last year. We came up, we tried to retest that level, got rejected. And right now we're sitting here. You can see between the 2017 all-time high and this $10,000 to $12,000 level over here, I basically don't see any support. There's no historical major activity here. So I think it's a matter of time before we do end up testing the support somewhere between 10 and 13,000. And if that doesn't hold for whatever reason, if there's any crazy stuff that happens in the world, who knows, we might actually wick below that. And it is possible, in my opinion, to be able to see Bitcoin wick under $10,000 in 2023. So just be prepared for that mentally, whatever situation arises. One more chart I want to share with you is the 3-day chart because it gives you an even shorter term time frame what I'm looking for. And here on the weekly chart, you can still see we need at least a reclaim of this breakdown level at about 19,000. But the real level I want to see reclaimed is the 3-day 50 moving average. So here is the same Bitcoin chart, just the 3-day time frame. The blue is the 50 simple moving average. The red is the 200 simple moving average, as I do with all my charts. And the same annotations over here. And you can see since we broke below the 50 3-day moving average here in December 2021, we have been in the bear market. And that is all that you needed to use as an indicator to be able to determine bearish or bullish what the trend is, and simply be patient until we reclaim that. And what I'm looking for with the reclaim is 2 consecutive candle closes above that moving average, which we have not had. We had fake outs here, but we did not get 2 candle closes consecutively above that moving average. Even here, this was when FTX collapsed, when CZ tweeted, we got 1 close above it, we did not get a second one. So that is your very simple bear bull indicator in a larger scale. And of course, I'm covering Bitcoin here, but in general, I think we can all agree what Bitcoin does, altcoins tend to follow. So as long as Bitcoin is trending down, altcoins tend to trend down. Once Bitcoin starts to become bullish again, I think altcoins will start to bottom and will eventually follow. So the most important thing, in my opinion, is just look at where Bitcoin is going, follow that trend, and then you can apply it to altcoins too. Okay, so very simple. I'm just waiting for a reclaim of the 3-day 50 moving average. And as you can see, it's currently actually at that breakdown level, about 19,000. That is what we need to reclaim. 2 consecutive candle closes, 3-day candle closes above it, and I will start to consider a medium to long-term trend reversal once again. Because you can see, I've shown you this many times over the last year or so, you can go and see this for yourself. Every time we do reclaim this 3-day 50 moving average, we tend to get major moves. The entire bull market in 2017 was above this average. In 2019, once we got above it, we went here from 4,000 to 13,000. Yes, here there have been a little bit of fake outs. We went above it a little bit, then we had the March 2020 crash. Over here, we got back above it in April 2020, and that is when we had the entire bull market. If you got out when it went below it in May 2021, you could have missed some downside. You could have got back in when it got back above it at 45,000 and ride that up to 69,000. Could have gotten back out over here at about 50,000 in December 2021 and stayed out all the way until now. And only once we reclaim it, we start to look at the possibility, hey, this might be a medium to longer term trend change and potentially maybe even the next bull market. But keep in mind what happened here between 2018 and 2020. We had a few crosses above and below it, and it is very possible that we see that thing again in 2023, where we might get a reclaim above it. Maybe we get a nice bear market rally, multi-month rally, and it comes back down and breaks back down below it, and then only sometime after the next halving or leading up to the next halving in 2024 that we really start our next new bull market. Until that happens, you can see we are below the 3-day 50 moving average. We're below this breakdown level of about 19,000. I still think there's very much downside potential. If you look at this chart, you can see there's very little support between that level and this level, and I think we could go down there. The question is going to be, do we rally up a bit more? Do we go to 18 or 19,000 first, get rejected again, and then only end up down there? Or does it just drop straight away? And obviously that's going to depend on different factors. So we'll keep an eye on the daily chart and the 4-hourly chart and stuff like that on a daily basis. Obviously inside the VIP Discord, I will update that every day and share my thoughts as it happens. But bigger term picture, potentially for the month ahead or the next 2 months or so, I do still think there's downside potential. And I would like to see us hit somewhere between 10 and 13,000 because I think that really increases the chances of the bottom being in. One thing that I've also been sharing here is this bullish divergence that is starting to form, but it is not yet complete. So as you can see here, the price has made lower lows, but the RSI is not yet confirming. Now, with this divergence, we tend to get 3 taps of it. Okay, that happens very often, which means we can get another test or another tap of this this kind of downward trend line, get a third tap on the rising trend line on the RSI. Let me draw this here. And that could potentially then be the complete bottom where it would be worth putting in whatever risk capital I still have, right? Fully go in there at that point with the expectation of the longer term upside, or at least a bear market rally potentially to 30 or into the mid 30,000s. Okay, I do see that very much as a possibility in the same way that we got the inverse over here at the top. You can see we got that negative divergence over here, and then we got a year-long downtrend. So I do think we are in the process of bottoming, but I do still think there's a good chance we still go lower to complete that bottoming process, and I would like to see it go between 10 and 13,000 because I think that would have a high probability of then being the bottom over there. So as you can see, timing wise, vertically over here, potentially somewhere between mid and end of February before that touch. So we could still go sideways for a couple of weeks, and that crash might not only come until middle to end of Feb. That is a possibility. But if it does come, I'm sharing this with you now so that you can be prepared for that and you can plan your strategy around that however you want to do that. And if you just want a very simple and high probability way of determining bear or bull trend, just look at this, the 3-day 50 moving average. If we reclaim that with 2 consecutive closes above it, 2 consecutive 3-day, so 6 days above that, then we can start to consider a longer term trend reversal. And as you can see here on the chart, this has been very, very helpful. You don't catch the exact top or bottom, but you catch the large majority of the move. Keep in mind also, we can see a cross above and below it as we have in this previous bear market, 2018 to 2020, but using it in general to determine that bear and bull trend is very, very useful. And I think it is going to continue to prove to be very useful in 2023 and 2024 going forward. So that is the easiest way, in my opinion, to determine these trends. Hope you found this helpful. Remember to smash the like button, and I will see you in the next video.